Hello guys, welcome to the Trading Parrot. 300 billion injected in the market in the past week. The Fed balance sheet is right now public. And if you've been caught wondering what the hell is going on or where is this going to stop, in this video, I'm gonna share with you where I think this move is going to really struggle to continue going. We're gonna cover everything that is needed to decide when is a better entry if you are already hands off in this market. Do not chase the price. We will look into all the details to decide what is a better opportunity for entering. And I do have some very important insights to make a more informed decision. Bitcoin has moved 7% in the past 24 hours. Ethereum 4.1. The Fear and Greed Index still hasn't priced in all this greed that is coming into the market. We are still sitting in the neutral zone. Altcoin season, we are still in Bitcoin season. So pretty much 27, 25 since beginning of March. For alts, there's still a lot of room to the upside to eventually outperform Bitcoin. But still, the king is making his move and all the alts should stay quiet until Bitcoin decides where is the next stop. You can see the week looks beautiful. The hour doesn't look as good because Bitcoin in the last hour has been moving very aggressively. And this shows you very graphically how the alts are lagging behind. We have a few usual coins making their moves today. I'm a big fan of Aptos, Phantom. Conflux Network has been in the top 1 for a few days, together with Stacks. Optimism as well, incredible project. All of them here present in the top 10 alt rank. And we wouldn't have a pump without Jim Cramer making the official announcement that we actually have to long the market, right? Every time he says short, be careful because probably the price is going to be doing exactly the opposite. In the past 6 months, we have been pretty much forming an inverse head and shoulders. The promise of this pattern is that it should make a move as high as from the bottom that was around 15K to 24. So it should make a move of 10K to the upside. This is the technical target of an inverse head and shoulders. The pattern is pointed out by trader Tardigrade. Breaking. Fidelity has opened its Bitcoin trading platform to millions of retail customers, commission-free. The block has 37 million retail accounts. And we are here looking again at the inverse price of Bitcoin against the dollar. Jordan says Bitcoin looks at the verge of doing Bitcoin things. And yes, this looks pretty bearish. So it's upside down. So therefore it's very bullish. This is confirming a breakdown. There is a touch on the trend line and the target should be the beginning of the trend line. So it's very bullish. It's one of the most bullish patterns that I'm currently seeing. The MFI in the monthly has printed 3 times in history a double bottom. And the last 2 times it has led us to the bull market. And if you ask me, the news of the month, if not the news of the year, is the liquidity that's coming into the system. It's both exciting times because we need that liquidity. That's the fuel of the market. Not just Bitcoin, not just crypto, stocks, Nasdaq, everything needs liquidity. But there is a sad part to it. Seeing that there is more liquidity is like admitting 100% defeat against the inflation. In fact, TED Talks Macro is pointing out nearly half of the Fed's quantitative tightening effort has been wiped out in a single week. Look at this move. That is the work in progress coming down, and pretty much it went halfway up. Plan B points out this is worse than COVID, similar to GFC. Protect yourself. We are witnessing the liquidity and credit facilities, loans, primary credit week average. These are the millions of dollars that are in the system. Remember what happened during COVID? Millions of dollars were printed. And what happened right after that? There was a V recovery and it went everything exponential. I'm not saying that that's necessarily the case here. What we are seeing right now in front of our eyes is the first candle printing liquidity into the system. That is not good for the system for the long term. It's not sustainable. It's a disaster. but it's a massive opportunity for investing as long as you're aware that it's a ticking bomb. So you need to manage your risk accordingly. This is not, I throw all my money and I look somewhere else. There is high risk, but there's also a potential for a huge reward. Interestingly, the DXY, it's still trapped around here. I would like to see the DXY breaking down the support at 103.6 and coming down, printing lower lows. That is another good sign that could give us some extra confluence and confidence to make our potential next moves for a long. The DXY, it's printing a MACD bullish crossover on the weekly. That is huge. This could well be a dead cat bounce, which might mean that maybe this is the time where it starts selling again, and that's good for risk on assets, or it could be a reversal to the upside, causing some drama with stocks and crypto. Both the Nasdaq and the S&P are looking really strong. And I'm not surprised, there is more liquidity, so this is definitely the driving factor to push the S&P and the Nasdaq to new highs. We are above the 200 MA, we are above the trend line, we are getting closer to potentially closing a candle with a new higher high. I would like to see it breaking the downtrend for an extra confirmation though. On the S&P, we've been flirting with breaking down the trend line, but right now we are above it, but it doesn't seem to be out of the woods. It still hasn't conquered any price above the previous high. We are below the super trend on the weekly, so there's still some work to do on the S&P. Nasdaq technology is doing a bit better in the past month, definitely. And we are 5 days away from the FOMC meeting. 75 basis points is completely out of the question right now. The two options are 25 basis points or nothing, which means to keep the interest rates at the same levels. And that right now has a chance of 81% for 25 basis points. So the market right now is pricing in a 25 increase, but at the same time is pricing in that there's a liquidity injection. So overall, they're assuming that things are gonna get more easy to make a profit. Expect some volatility. We have a few meetings that are extremely important coming next week. The CPI, the FOMC, monetary policy, manufacturing PMI, and don't forget all the indicators that we show in this channel, all the bots, signals, orchestration, and all the tools. You can get them for free if you are trading with BitGet or if you're trading with the OKX. You can find the instructions on the tradingparrot.com/join TTP. You can also have a look at the description. It's packed with discounts for different platforms and tools that I normally use to do my bot trading. We've been monitoring the RSI on the weekly, printing this double top. And 2 days ago, we were expecting the RSI to make a move to the top of the channel. Right now, we are paying a visit to that top of the channel, which in terms of price, if we use RSI reverse, that translates to this area of the green. So we are almost there. If the RSI touches the trend line, we are probably going to get to 27.3. So now the question is this upwards sloping resistance on the RSI going to make a move for a pullback before coming back up? Well, if that's the case, which will be the most likely scenario, then 27.3 will be most likely our next local top. Of course, we can break out this, and that will mean that we are doing a move parabolic, which I wouldn't be surprised with 300 billion. Some of that can come into Bitcoin. I still think that the most likely scenario is here, a pullback, some take profits, and then another attempt to the top of the channel. Although this seems like a God candle and a lot of volatility, when we divide the Bitcoin volatility by the VIX, we can still see that we are hovering around the same levels. So if we make our move to the top of the channel in this ratio, that will be a massive move, but that usually takes time. And at the moment, we are already at the top of the weekly Bollinger Bands. Can we break that? Yes, of course. During the bull market, we are constantly breaking above the Bollinger Bands. If you look at the previous cycle, the bear market ended with many candles above the top of the Bollinger Bands. So if you ask me if it's doable, yes, it's still doable. But always remember that in all the bear markets, when we have our first run, we always came back down to a very similar price to where we came from. And there's no exception in the history of Bitcoin for that. So the odds are always favoring that the Bitcoin price can find a top and then come back to punish the longs once more before making the final move into bull market. It can turn out completely the opposite, but I'm trying to point out that Bitcoin has never done that. Our Fibonacci channel, good news, it has been broken, but we still haven't closed the daily. We need to definitely monitor if daily is closing above 26K. Closing below 26 and we are below this, it means that we are still holding this trend line as resistance. We're hours away from closing the day, so let's keep an eye. If tonight at the closing of the daily candle we are above 26K and we come back to 26K to test it as support, that will be a golden entry. And assuming that you're taking the right risk management, some stop loss placing, that could be a great place to enter with a long. RSI on the weekly is closing above 58. We are doing a higher high that is extremely bullish for Bitcoin. The week hasn't finished, so let's see where that candle ends up on Sunday. Or YCO chart, it's right now screaming 33 to 34K as a target. This is again subject to where we close the week. If we retrace below 24K on the weekly and we leave a massive week to the upside, say goodbye to any dreams to conquer 34K. But right now, almost anywhere that we close above the 24K will be seen as a very bullish. Hopefully, the higher we manage to close this weekly candle, the more bullish is going to be perceived and more investors are going to start FOMOing in to Bitcoin. And this was really beautiful. We managed to hold within the bullish area where the RSI normally bounces, and that took us straight to the upside. But we can see how this trend line that has been support right now is being resistance. This is another price that we need to conquer as soon as possible. If you want me to make more videos like this, please hit the like. That's the only way I have to know that you're liking these videos. Same goes with the comments. Comments are the best thing that you can do for this channel, so the YouTube algorithm shows this channel to other people and we keep growing. And guess what? The channel is growing massively, just like the price of Bitcoin. So thanks so much for that. And keep hitting the like on every single video. Guys, you're doing an amazing job with that. We have hit 1.5 million views in the channel, and I'm really thankful for that. And remember, we are in a month of a very tight CPR. So this kind of move is absolutely expected. We knew from the 1st of March that we were going to have an extremely volatile month. And that's precisely what we are having. We are doing something very healthy from the point of view of the CPR. We are crossing the first resistance and we are approaching the second. Holding above the first resistance is signaling things and preparing Bitcoin for a continuation into a bullish move, and reduces the chances that in the next month, in April, that we're coming down to visit the first support, the first red line. Although we were expecting Bitcoin to come back down and retest this trend line on the daily RSI, the Fed decided to print 300 billion and Bitcoin canceled the plan of coming back for a retest, and right now the daily is at the level of 70, which is pretty overbought for a bear market. Can it go higher? Oh yeah. In fact, in 14th of Jan, it went all the way to almost 90. So there's 20 points more for RSI if it wanted to go really mental. If this RSI on the daily doesn't manage to get as high as this one, we're gonna be forming another bearish divergence that could anticipate what's the next pullback. On our ascending broadening wedge, we are currently testing it support, which is pretty healthy and supporting the idea that we could go even higher. On the 1 hour RSI, we are way overdue for a retest of the trend line, which is located at an RSI of 60, which coincides with this band right there. So Bitcoin on the 1 hour is really calling for a retest of 26.1 to 26.3. If you get lucky and you manage to enter at that price, that could be a great area for re-entering the market for another wave to the upside. This all as long as we continue with the parabolic move. So placing your stop loss somewhere wise, in case the parabolic move is ended, it's a must. Right now, the longs are going mental, 84 on the RSI, and the shorts are extremely quiet. The Bitcoin dominance is getting very close to our target of 47. It doesn't seem to have any plans to stopping. Total 3 is bouncing on our support. If Bitcoin decides to do a healthy move and finds support at a decent bullish level, I'm expecting Total 3 to make a higher high. There's so much liquidity in the market that for as long as this narrative stays true, there's no reason to believe that this wouldn't break out and make higher highs. We can see the liquidity injected by the Fed right here. The balance sheet make a massive move to the upside. The RSI of the balance sheet of the Fed has broken out, and overall the global liquidity is also pointing up. If we look at the weekly EMA ribbon, we are seeing how beautiful it looks. The gold green candle breaking above all the levels of the EMA ribbon right from the support we drew when we were below that level. We could even speculate that if this thing holds, we could get a twist of the EMA ribbon somewhere in between June to July. And let me tell you something, once you get the twist on the weekly, there's no way back. It just goes higher and higher. Reminder that we still have that CME gap at 20K. This is going to haunt us for as long as we have it still unfilled. And one of the reasons I don't enter the market yet with this explosive move is I have a rule. I never enter when the gap is so biased towards risk with the longs. In this case, we have 30 billion of extra risk of liquidation. So personally, that is too risky. You, of course, do whatever you think. The CME gap coincides with this area of accumulation of liquidity, which is getting very juicy for market maker. Yeah, absolutely. There is still liquidity. It's the lowest hanging fruit right now for them to take. And we're doing higher highs, so there's no indication we're coming down here. But remember, crypto can change overnight, so handle your risk accordingly, and do not be surprised if in the coming month or so, we might end up touching that. And before I let you go, and just so you enjoy your weekend, take a picture of this. This looks beautiful. This is a descending pennant with a retest of the price twice, with a long wick to the downside, and then the God candle breaking above that strong resistance level, signaling what, ladies and gentlemen, something very bullish that I don't even want to say. So thanks so much for watching. If you like this content, make sure you subscribe, hit the like, and the best thing that you can do for this channel, guess what? Leave a comment.